Something massive just happened in the mortgage market, and if you're thinking about buying a home, refinancing, or even just watching what banks are doing with your money, you need to stop what you're doing and pay attention right now. Because what just dropped is not just a rate cut announcement. It could be the opening move in something we haven't seen in years. A full-blown home loan war between the biggest banks in the country. And trust me, when banks start fighting over your mortgage, you are the one who wins. So here's what happened. One of the nation's major banks just slashed its mortgage rates again. Not a tiny tweak, not a cosmetic adjustment to grab a headline, an actual meaningful cut that is now putting serious pressure on every other lender in the market to respond. And the timing of this? It's not accidental. This is strategic. This is a power move. And the ripple effects of what just got triggered could reshape the housing market for the next 12 to 18 months. Let's rewind for a second so you understand why this moment matters so much. Over the past 2 years, we lived through one of the most punishing rate environments in modern history. Mortgage rates were climbing so fast that millions of Americans who wanted to buy a home simply couldn't afford to. Monthly payments on a median-priced home nearly doubled compared to what they were just 3 years prior. The market froze. Sellers who had locked in historically low rates refused to list their homes. Buyers were priced out. The whole ecosystem seized up like an engine with no oil. Real estate agents were struggling. Builders were pulling back. The dream of home ownership started to feel genuinely out of reach for an entire generation of buyers. And then something started to shift. Inflation began to cool. The Federal Reserve started signaling that the era of aggressive rate hikes was behind us. And very quietly behind the scenes, mortgage lenders started doing the math. They looked at their loan books, they looked at the competition, and they looked at all these millions of would-be buyers sitting on the sidelines just waiting for their moment. And somebody decided, we're going first. Now, the bank that fired this first shot is not doing this out of charity. Let's be very clear about that. Banks don't slash rates because they love you. They slash rates because they see an enormous opportunity to capture market share before their competitors do. Think about it like this. Right now, there is a pent-up wave of demand in the housing market that is almost unparalleled. There are millions of people who have been waiting, saving, watching, hoping for rates to come down enough that buying a home makes financial sense again. Whoever captures those borrowers first wins billions in loan origination fees, interest income, and long-term customer relationships. This isn't charity. This is a land grab. And here's where it gets really interesting. When one major bank makes a move this aggressive, the others have a choice. They can either respond and match the rate, or they can watch their loan officers' phones go quiet while their competitors' phones ring off the hook. History tells us exactly what happens next. They respond. Every single time. What starts as one bank cutting rates turns into 2 banks cutting rates, then 3, then a full-on race to the bottom, in the best possible way for consumers. That is how a rate war starts, and that is precisely what appears to be unfolding right now. We've seen this movie before. Back in the early 2000s, when the market was heating up, lenders started competing so aggressively on rates and terms that it fundamentally changed what was possible for everyday buyers. Now, obviously, that era came with its own problems, and we don't need to repeat all of those mistakes. But the competitive dynamic, the way banks start throwing incentives, slashing points, cutting fees, and offering better terms just to win your business, that part is actually really good if you're a borrower who's prepared. So, what does this mean for you practically right now? If you have been sitting on the fence about buying a home, this is the kind of moment you pay attention to. Not because you should rush into a decision that doesn't make financial sense for your situation, but because the trajectory of where rates are heading has potentially shifted in a significant way. When banks start competing, rates don't just dip, they can fall faster than most analysts expect. And if this is truly the beginning of a rate war, we could see meaningful movement over the coming weeks and months that changes affordability calculations dramatically. For anyone thinking about refinancing, this is also worth watching very closely. Millions of homeowners took out loans at the peak of the rate cycle, some paying well above 7% on their mortgages. Even a 1 or 1.5% reduction in your rate can save you hundreds of dollars a month. Multiply that over the life of a 30-year loan, and you're talking about tens of thousands of dollars back in your pocket. If rates continue to fall due to competitive pressure between lenders, the refinancing wave that the industry has been waiting for could finally arrive. Now, let's talk about what to watch for in the next few weeks, because this story is just getting started. Pay attention to whether the other top 5 lenders respond with rate cuts of their own. If 2 or 3 of them move within the next 2 to 3 weeks, that confirms we are in the early stages of a competitive pricing war and you want to be ready to act. Also, watch the spread between what banks are offering and where Treasury yields are sitting. Historically, when that spread compresses, it means lenders are absorbing more risk to win business. And that is a powerful signal of how hungry the market is. There's one more thing I want to say here that I think is really important and that almost nobody is talking about. In a market where rates are falling and competition between lenders is heating up, the buyers who win are not necessarily the ones who wait for the absolute bottom. Trying to time the exact lowest rate is nearly impossible, and the attempt often costs people more than it saves them. The buyers who actually win are the ones who get prepared now, who know their credit score, who have their down payment ready, who understand how much home they can genuinely afford, so that when the right moment hits, they can move fast. In a market with rising demand and still limited inventory, speed matters as much as rate. This rate cut is not just a financial news story. It is a signal about where we are in the economic cycle, what the big banks believe is coming, and what opportunities are being created for everyday people who are paying attention. The banks are making their moves on the board. The question is whether you are positioned to take advantage of what they are setting in motion. Stay locked in, watch those competing announcements, and if you found this breakdown valuable, make sure you hit that subscribe button, because this rate war, if that's what this becomes, is going to be one of the most important financial stories of the year. And we are going to cover every single development right here.